Everyone keeps talking about XRP hitting $4. You've seen the charts, you've heard the predictions. But what if I told you that the real story, the one unfolding behind the closed doors of the world's largest financial players, makes $4 look like a forgotten milestone? What if the smartest money in the room, the institutions now moving into this space, are laughing at that price? They aren't deploying capital for a simple double or triple. They're positioning themselves for a seismic shift, and their real price target is something the mainstream narrative hasn't even begun to price in. The game has changed. In this video, we're going to break down the institutional playbook piece by piece and reveal the price point they are truly eyeing. Stay tuned, because the numbers we're about to discuss are not what you think. For years, the XRP community was in a state of suspended animation, waiting for the one thing that could unlock its true potential: clarity. And in 2025, that clarity finally arrived, not with a whisper, but with a bang. The resolution of Ripple's case with the SEC in August 2025 was the green light the entire market was waiting for. This wasn't just the end of a lawsuit, it was the starting gun for a new era of finance. This resolution built upon the landmark court ruling from 2023. That ruling drew a critical line in the sand, finding that while some of Ripple's direct institutional sales were securities offerings, the programmatic sales of XRP on public exchanges, the ones you and I use, were not. That single decision dismantled the biggest cloud of fear and uncertainty that had suppressed XRP's price for years, providing a regulatory foundation that institutional investors desperately need before they can allocate serious capital. While retail investors celebrated this as a victory, the big institutions saw it as something else entirely: a business opportunity, a significantly de-risked asset with proven utility, and a clear path forward in the world's largest economy. This wasn't just another win for crypto. This was the moment the floodgates of institutional capital were given permission to open. And now they are creaking open, slowly at first, but with an unstoppable force behind them. The long winter is over, and the institutional spring is just beginning. So, when we say institutions are here, what does that actually mean? It's not just a headline. It's a multi-pronged invasion of capital and technology into the XRP ecosystem. The narrative that institutional money is finally here is backed by a growing mountain of evidence, with assets under management in XRP products already climbing into the high hundreds of millions and approaching $1 billion. This isn't a test run. It's the beginning of a strategic allocation. Let's break down exactly how they're getting involved. First, and most importantly, are the regulated on-ramps. For years, institutions had no safe, compliant way to buy and hold XRP at scale. That has now changed. We are witnessing the launch of the first spot XRP exchange-traded funds, or ETFs, in the United States. While these products from names like Grayscale, Franklin Templeton, and 21 Shares are new, their significance cannot be overstated. We all saw what happened with Bitcoin ETFs. They provided a simple, regulated bridge for trillions of dollars in institutional capital to flow into Bitcoin. They act as a one-way valve for capital, sucking up the available supply to back the shares they issue. These XRP ETFs are designed to do the same thing. Every dollar that flows into an XRP ETF requires the fund manager to go out and buy real XRP on the open market and lock it away in secure custody. This isn't speculative paper trading, it's a direct and sustained demand for the underlying asset. Some analytical models estimate this is already having a major impact, suggesting a reduction of nearly 29% in certain liquid supply metrics as these funds accumulate tokens. But unlike Bitcoin, institutional interest in XRP isn't just about holding it. The second and perhaps more powerful prong of their strategy is utility. Ripple's payment network, RippleNet, has been quietly expanding, connecting hundreds of financial institutions across the globe. For years, many viewed these partnerships as pilot programs. That view is now obsolete. A growing number of these partners are leveraging Ripple's flagship liquidity product, which uses XRP to facilitate instant cross-border payments. We've seen reports of significant ODL volume, and the trend is clear. Real companies, like Tranglo in Asia and major banks like Santander, are using this technology for live commercial payments. This isn't a test anymore. This is a real-world competitor to the slow and expensive legacy systems, solving a multi-trillion-dollar problem. Institutions aren't just buying an asset, they're buying into a technology. Finally, there's the new secret weapon in Ripple's institutional toolkit, its own stablecoin. The development of a Ripple-backed stablecoin, RLUSD, is a masterstroke. It provides institutions with a compliant, dollar-backed asset to use for payments, while using XRP as the bridge for instant, low-cost liquidity when moving between different currencies. While its rollout is still in the early stages, it's gaining traction fast, with a market cap that has already crossed the $1 billion mark. It completes the picture, giving institutions a dual-asset solution that is secure, efficient, and built for their needs. This brings us to the central question. If all this is happening, why are so many people still stuck on a price target of $4? The answer is simple. That target is a relic. It's a price point born from retail speculation before the first dollar of institutional ETF money ever entered the market. To understand where the price is going, you have to understand how institutions think. They operate on a different timescale. An institutional trading desk doesn't allocate hundreds of millions to a new asset hoping for a quick 50% gain. Their primary goal is to front-run a multi-year adoption cycle. They're positioning for an order of magnitude change, not a simple rally. Their investment thesis isn't built on a one-year chart. It's built on a 10-year business plan. When they see regulatory clarity, a working product, and regulated ETFs, they don't see a trade. They see the birth of a new asset class. They model its potential adoption curve, market share, and its potential to become a core piece of future financial infrastructure. This is where the numbers get really interesting. Projections from analysts are starting to reflect this new reality. For example, research from Jeffrey Kendrick, a respected analyst at Standard Chartered, has laid out a potential path for XRP that targets $5.50 by the end of 2025, with a longer-term projection reaching as high as $12.50 by 2028. Let's be clear, these are model-based projections, not guarantees, but they give us a critical window into the institutional mindset. They aren't pulling these numbers out of thin air. They are based on models of network adoption, of capital flows into ETFs, and of the total addressable market for cross-border payments that XRP is disrupting. A $12 XRP isn't a fantasy. It's a calculation based on capturing even a tiny fraction of the global payments market. It is this long-term, utility-based valuation that constitutes the real price target institutions are working towards. The $4 target is just a single battle. They are planning to win the entire war. What we are witnessing is not a single event, but a convergence of powerful forces creating a perfect storm for XRP. It's a scenario that has been theorized for years, but is now unfolding in real time. First, you have the seismic shift of regulatory clarity in the United States, which has made the asset significantly more investable for large pools of capital. Second, you have the brand new institutional on-ramps in the form of spot ETFs. This is the physical bridge connecting the vast ocean of institutional wealth directly to the XRP ledger, with a mechanism designed to create a continuous and growing supply shock. Third, you have proven, real-world utility. Ripple's payment technology is no longer a science project. It's a live network processing commercial volume. Furthermore, the expansion of the XRPL into areas like the tokenization of real-world assets, from U.S. Treasury funds to real estate, is creating promising new use cases for the ecosystem. And finally, you have potential macroeconomic tailwinds. With many economists anticipating an easing of monetary policy and potential interest rate cuts heading into 2026, the environment could become increasingly favorable for growth assets like cryptocurrencies. More liquidity in the system means more capital looking for a home, and newly investable regulated assets like XRP stand to be prime beneficiaries. Each of these factors on its own would be incredibly bullish, but happening all at once, It creates a feedback loop. ETF inflows drive the price up, which draws more media attention, which encourages more institutional adoption, which leads to more utility on the network, which further validates the investment thesis and drives even more ETF inflows. This is the flywheel that institutions have identified, and they are getting in on the ground floor. So the evidence is piling up. The institutional playbook is clear. They are not here for a quick flip. They are here for a fundamental re-rating of the asset. But what do you think? Are the institutions right? What is your long-term price target for XRP? And what do you believe is the single biggest factor that will get it there? Drop it in the comments below. I read every single one, and I want to hear what the community thinks. And if you're getting value from this in-depth breakdown and want to stay ahead of the curve on XRP and the broader crypto market, make sure you do two things. Hit that like button and subscribe to the channel with notifications turned on. You won't want to miss what's coming next. It's time to forget the noise around $4. That conversation belongs to the past. The arrival of institutional capital, enabled by regulatory clarity and powered by real-world utility, has fundamentally changed the game for XRP. The new debate, the one happening inside boardrooms and on institutional trading desks, is no longer about if XRP will be adopted, but how quickly and at what scale. This isn't just about a price chart anymore. This is about the rewiring of a global financial system that is decades overdue for an upgrade. XRP is positioning itself to become a critical piece of that new backbone for finance. The smart money understands this. They aren't just betting on a coin. They're investing in a new technology, a new payment rail, and a new future for how value moves around the world. And that is a bet measured not in dollars, but in decades.